Welcome to G3 Investors. As a Tier 2 patron, you get early access to the setups that I see daily before the market opens and updates to the trades that I would make in the model portfolio, number 2 here in this case, throughout the day. This is an educational website. It's designed to show my patrons how I trade or how I would trade ETFs using the system that I've developed with a model portfolio. And this is model number 2, as you can see here. Now this is one of the schedules that you will receive each day before the market opens. And there's 4 tabs here. I'll go over each of those tabs, but this section here tells me what the market did today for the week to date, month to date, and year to date. Then I usually make some comments about what happened during the day, the significant events. And then I compare what our results with our benchmark. You should always benchmark your trading, and I bench it against the S&P 500, then the NASDAQ. As you can see, we're doing very well. And then I do something that I call market risks. We had a correction that lasted January to the middle of March. The NASDAQ went down 20%. It has gained 13% off of that bottom, which is a 52% recovery. The S&P 500 lost 13%. It's gained 9% off its bottom, 60% recovery. And then I say, here are the market risks. Now, I might talk about those every time, but that really hasn't changed much. The only thing I added here, earnings expectations will likely decline in April's quarterly reports. I mean, the earnings may be great in April, but they're likely to give guidance in the forward. Guidance will probably be lower. Okay, the economy to me seems to be slowing. And then I like to put in important events that happened that moved the market, and then I just say, here's the event and here's the effect on the market or the market's reaction. Now this is important. Here is a link. So if you have a friend that wants to sign up, become a G3 patron, tell them about highlighting this link and putting it in their browser and signing up. You can get my YouTube channel that's the channel address right there, but an easier way to get it is just if you go to YouTube and you type in G3 Investors, I think it's comma space, oh man, I forget what it is now. I'll come back to that. And so then there's some earlier returns on the models. So okay, so let's look. So what do you get? The first thing you would look at each day, and this is what you should have received Thursday morning, April 7th. And you could see we had one open trade highlighted in yellow, okay, and it was in XLV, which is the healthcare sector. The purchase date was on the 6th, which was Wednesday. So Thursday morning, that was the results of the trade. We had an unrealized gain of $75. So what I do here is the swing low is the last time, the bottom of where I got stopped out when I traded this the last time, or where I think the bottom is from a swing trading standpoint. And then that's the buy point or the pivot point. So that's what we bought. We bought 250 shares at $139. And then if you go over here to the right, okay, you can see the results of the trading. There's the prior month's gain or loss on that ETF. That's the year-to-date gain, and that's the average amount invested. It's just a calculation. So we've made 2.1% on that right now. Now, what is important is when we look at the results, okay, these are the results of the trading today. So what happened today? Well, I still have that open trade, but notice something. I have changed XLV, I believe it was this color, which I don't know what that is, orange or whatever, which meant that it's an ETF that had a black cross. Well, it no longer has a black cross. And not only that, it's the first ETF, so we got to change that to 1. We now have 1 ETF that has made a new all-time high. So let's take a look at that on a chart. How does that look? What do I mean? Okay, now on this chart, they're always the same. I might look at, this is a 3-month chart. I could also look at a 6-month chart. But basically what I do is I look at the daily chart of the ETF. So if we can change that to 6 months, and you can see that here was the old all-time high for XLV, the healthcare select sector. And look at what happened today. It moved out and it made a new all-time high. The actual high now is 142.34. So I'm going to move this little line right here, right now, to 140, what did I say it was? 142.34. 142.34. And just apply that. Voila, there we go. We got an ETF that made a new all-time high, and you've seen what I did. This dotted line here means that I took a position. Where did we take the position? When we go back and look at the schedule, we took it at 139. So that's how it ties out to the charts. Now, if you're going to learn to trade, you've got to look at a chart like this. You know, I use Fidelity. You can use anybody out there has a good trading system. I mean, I'm not telling people what trading system or what I don't mean trading system. I mean what charting service you use. But I just use Fidelity because I trade with Fidelity, and the reason I do is a lot of their ETF trades are free. You don't pay getting in and you don't pay getting out. And anything you can do to reduce your costs in trading, your trading costs, it's a smart thing to do. Now, what do I mean about the black cross? Well, this blue line is the 50-day moving average. And technically, when it crossed under the red line, which is a rising 200-day moving average, that was technical damage. And that technical damage was created by this little consolidation here where it wound up sideways. And the funny thing, I just made a comment today about how the longer you have this winding or you're in this trading range, when it breaks out, it usually breaks out strong. And look at that breakout. It's an extremely strong breakout. But as a swing trader, we made money on this breakout here. We got stopped out. Then we made money again. We got stopped out. Now we're making money again. And right now we're up over $700 of unrealized gains, and we probably got about a $400 realized gain based on when I will set the stop out. Because in swing trading, you don't trade long term. You're trading short term. And so you'll find me a lot of times looking at a 3-month chart. I'm going to go back to the 3-month chart. Why? Because that's the cycle that the market thinks in. So as a swing trader, you have to think in that cycle. Well, here's a difference. We also do day trading. So if you go back here and you look at our results today, you can see that I put the shorts in blue. Sorry about the different colors. It's just highlight stuff to me. It doesn't really mean anything to me. But we had 3 trades today. We traded 2 trades in SQQ. That's the inverse of the Qs. We bought 1,000 shares at 36, and we got stopped out at 35. Now, in the first hour of trading, I don't normally like to do it, but I got drawn in because, you make money fast. When things are going short, they go to heck in a handbasket, quite frankly. But we lost $200 on the first trade, and then it came right back, and we got in again at 36.10. And we made $800 the second time around. Now on TWM, we got in at 15.20, about the same time we got in there, and it made 396 and never came back. But the other thing, so up here, and the reason I've got this down here for the short side details is because I will trade. Sometimes I might make 3 or 4 trades in one ETF. These are short trades, are always day trades. Okay, so this is not a day trading service, but swing trading involves day trading. It's part of the same. So this service is not just for beginners, it's for intermediate traders as well. So that's why I do it the way I'm doing it here. Now, the other thing you get each night is what I call the trade risk. And every trader has to say, okay, what's my trade risk? Well, again, I'm showing the stuff again. Here's the swing low. Here's the range. Here's here's the trigger, 139. Okay, there's the current price. There's the swing high, 142.34 that we just made today, and that's the the trigger difference right there. And so that would be the current stop out price, 140.56 in this case. Okay, and so if I stopped out at that because I bought it at 139, I'd make 390 bucks. Okay, so my risk is positive in this case. Again, I highlight things in yellow. Yellow always means caution. Green always means good. Dark green means very good or excellent. Okay, blue means it usually means short or I'm cold or indifferent to it. I mean, just the way I am. I got to highlight stuff. Okay, now let's go to the setups. Okay, this was the setups we got today. Okay, and see we were at 137.52, so we were underwater on that trade. If it had went under, we would have lost probably 300 or 400 bucks. Okay, actually there it is right there. We would have lost $369 if we'd have got stopped out precisely at that location. And we only had a $75 gain, and that was as of Thursday, the beginning of Thursday. So that was really actually Wednesday's activity. This is what happened Wednesday, and so in the morning I go through the futures, and I go through and I look at the futures to find out what is going to trigger at the open. So if we go through and we look at this, that's not going to trigger. If the buy point is 265, it's not going to trigger at 255 for the semiconductors. Well, we're already in that one, so we don't have to worry. How about the banks? No, it's not a go. So on and so forth. Now, whoa, wait a minute. I got one here highlighted in yellow. Why did I highlight it in yellow? Because our buy point was 22 and it triggered at 20, and it was at 2160. So if it's at 2160, it's probably going to move 50 cents or more during the day. So I said, boy, this one might trigger. And boy, did it ever. And guess what? I missed the trade. So I'm not perfect, okay? No one is. But let's look at what happened to UNG. And we'll look at that. It's the last thing I expected for, the winter's over. Whoops. Who would think that UNG would be going up? So see, I don't have it dotted. I didn't get in at 22, so I missed the trade because I was focused on shorting the market. And the last thing I expected, I watched UNG. Let's look at it on a daily basis. Okay, so here's a daily basis. That's 2 days. I'm going to go to 1 day here. Okay, so there's a 1 day view of what happened to UNG. And when I looked at it in the morning, and then I looked at it in the afternoon, I thought, there's no way this thing is going to hit 22. And even though it bumped up above it there, it failed real quickly, so I didn't get in it. But I just thought, this is wild and crazy. And then look what it did. So there we are. And then after hours, it's at 22.27. So it would have been a good trade, but I missed the trade. So sometimes you win some, you lose some. So let's look at SQQ. That is the inverse. Okay, so what happened here? So it made this big move down, and my buy point was 36. Okay, initially my buy point was 36. That's where I was going to get in, and that was based on what was happening here before the market opened. So I thought, man, if it hits 36 and it's going to go like crazy. Well, it hit 36, went up, and it went down, and I got stopped out on that bar right there for a loss of 200 bucks. So if we go back to this schedule here and we look at our results, we go down, there we go. I got in at 36, I got stopped out at 35.80, so I lost 200 bucks on that trade. You lose. Trading is win, lose, win, lose, win, lose, win big. That's how that's how you make money in trading. And we're looking for the big trades, but we also want to make sure we keep our small trades. So this is a good ratio. So on this, these are two small trades. These aren't big winners here, folks. These are small. We lost 200 on that one, but we made 800 on that one, and we made 400 on that one. So we made money on our winners, more money on our winners than we made on our losers. So this ratio, that's 4 to 1. The gain was 4 times the size of the loss, and that's a good ratio. If you can get 2.5 or 2 times or 3 times, you're doing good. You're a good trader if you can do that. So it's important to do that as well. Let's go back. I want to show, okay, what happened next. So I'm going along, and it comes back down, and it comes down like this, and I go, well, look, I got in at 36, so my rule for re-entering is getting above that peak right there, which happens to be 36.09. Okay, now none of this has happened at this point in time. Okay, we're just looking at the schedule through here, and so it still hasn't crossed. Now it crossed right there when that little, we're down here on the MACD, the histogram has went positive, and it crossed right there. And so I said, well, I want to get in. Now I could have got in at 36. This was 36. No, this high was 36.09. I should have got in at 36.10. That's 1 penny above it, and that's what I got in at, 36.10. So it went up, came right back down, but then went up, and then we got stopped out here. And I believe the stop out, without looking, I think it was 36.90. Yeah, it was 36.90. And we got stopped out here after the histogram again started going down. Okay. Usually you get a double peak, like I didn't get stopped out here because it didn't go down below this red dotted line here. And I see sometimes I have this line colored red or blue, and sometimes I have this line colored red and this one blue. So the colors don't matter to me. I'm looking at what is happening out there. Okay, let me go back. We've done the setups, we've done the results, we've done the year-to-date, and then the trade risk. So that pretty much explains what you get at G3 Investors each and every day. Now I'd like to just take another moment, and I will send out an email on how to get to this, but this is what my channel looks like. And I upload, these are all the latest videos. There's some introduction videos. I'm going to add this one to that, and I'll probably put it out here because it's the most, but then there's important candlestick charting patterns, and then there's even videos on inverse trading of ETFs. There's lots of videos out there. They're not all on this list, but that's how I've got my channel set up. And I hope you guys learn a lot from trading. I know I learned from every patron. I encourage people to ask questions, follow along on your patron account. You can go on your patron account and you should be able to look up all these old videos, or you can come on my channel and look them up here. And that's about all I got on this video. This is Greg Gallagher with G3 Investors. Good trading and good luck.